Welcome to AM Best Audio.
The U.S. property casualty industry capitalized on improved underwriting and pricing in 2025 to generate its best performance of the past decade. That according to a new AM Best report. Associate Director David Blades and Senior Industry Analyst Christopher Graham are here with us today to go through those results. And David, there's some fairly significant news here in terms of a bounce back in results within the PC segment. Can you explain the significance of that?
Definitely, John. I think what we saw in 2025 was that when you look at the results for the PC industry from the standpoint of its net underwriting profit and from the standpoint of its net combined ratio, the results in 2025 were the best that we've seen for the PC industry in the last decade. So if you look at 2023 results and compare them to what we saw in 2025, net combined ratio for the PC industry was 8 points lower. So it's significant improvement from that standpoint. And from a profitability standpoint, the difference between the net loss in 2023 and the net underwriting profit in 2025 was about $80 billion. So again, it's significant in that respect. The drivers of that and the main drivers have been the two lead personal lines coverage, the private passenger auto and homeowners. Both of them have shown significant improvement in the last 2 years now. Private passenger auto generated profit in both 2024 and 2025. Homeowners was improving in 2024 and then finally produced about a sizable underwriting profit. So they joined the party, so to speak, in 2025. And so it's been those lines, although there are some commercial lines that contributed as well. The personal lines segment has been the driver in terms of the 2-year runway of improvement that we've seen.
So how are carriers able to achieve those positive results?
So I think a lot of them were driven by initiatives that the companies have taken. I think one side fact to benefit the personal line side, as I mentioned, because they were the driver, is that from a catastrophe standpoint, 2025 was a relatively benign year, not discounting the California wildfires in January, but from an overall perspective, I think a relatively benign cat year definitely helped, specifically on the homeowner side. But from a personal auto perspective and from a homeowner's perspective, focus on premium adequacy, refined underwriting, and usage of technology to help from an expense standpoint, drilling down on claims handling. All of those things helped offset any of the negatives that we've seen, especially on the personal auto side from a claim severity still rising a little bit. But I think the improvements in underwriting, the improvements in pricing, and even the improvements from a regulatory perspective in terms of regulators working through rate change requests more quickly and getting those responses back to the insurance company so that they can implement the changing or the new rates. I think those have all come together to really help in that respect. And like I said, there was improvement on several commercial lines as well. So putting all of that together, I think it's the actions that were taken by these insurance companies are really drilling down on what they saw as their needs to help where they needed to see improvement. And I think those really have come to fruition these last couple of years.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Chris, on the commercial side, what stood out to you in terms of a positive performance?
Workers' compensation has been a very profitable line for insurers for some time now. Continued improvements in workplace safety has really helped temper the losses there. And, again, year after year, we see reserve takedowns. Losses are just not, developing to be what has been projected. Part of that, too, has been a relatively benign medical inflation. So, as the workers' comp is paying the medical benefits for the injured workers, it just hasn't. The inflation hasn't materialized the way we had been seeing, in the past. So those two things are really what's driving the workers' comp. Also on the commercial side, surety has done very well. It's a smaller line, but the profit margin on surety is actually the greatest among the commercial lines. So, it's relative, it's in nominally not much, but for those who are writing it, they're doing well, and it is contributing to the benefits for the commercial lines.
Which commercial line segments face the biggest challenges in rebounding from 2025 results?
Other liability occurrence had a bad year. There was a lot of adverse development on prior years. When we say prior, we're going back, like if you look at the annual statement, Schedule P, it shows 10 years, and then the years 2015 and before that had a lot of adverse development. And it's going to take some time, I think, for that to settle down. How the insurers respond to that going forward. Are they going to be able to price themselves into a profit cut to cover adverse development? That might be difficult. Commercial auto has, been a bad line for as far as financially goes for some time. That as well. That's been probably a good, 12 to 14 years now that they've been consistently raising rates, and they just can't keep up. One of the big drivers there is social inflation. Commercial auto has probably been hit harder by social inflation than any other line for over the past decade, and it's that makes it hard for insurers to accurately price, because you don't know what the claims are going to be when when the jury issues a nuclear verdict. All of a sudden, everything's out of whack. You're not priced properly, and you fall behind again going forward. So it's kind of a vicious cycle right now for commercial auto. It was a little better in 2025 than what we've seen in the recent past, but there's still a couple $1 billion of adverse development on commercial auto, and it's going to take time for insurers to catch up to that.
All right.
And I was going to say, I think, in addition to what Chris said, I think medical professional liability, as he mentioned, any of the lines that have been impacted by social inflation, and I think MPL is another one that's feeling some of the effects of social inflation, in addition to the general liability and the commercial auto. And I think that's another line that's kind of struggling to come along, in addition to kind of fighting through challenges to tort reform, right? So I think that's another line where there's been some struggles, and as he mentioned, social inflation, it also hit me that's another line that's being impacted as well.
All right, Chris, David, thank you so much for taking the time to speak with us today.
Thank you, John.
You're welcome.
That was Associate Director David Blades and Senior Industry Analyst Christopher Graham. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.